In Trump's first term, he was more anti-Bitcoin. And there's been I think it's been proven that in this, especially this past election, that being in any way anti-crypto and it's, especially anti-Bitcoin is not really a winning strategy for election.
This fiscal dominance, where government spending is the primary driver of the economy, is a new and powerful force. While she doesn't believe a gold revaluation, where the government officially raises the price of gold to pay off debt, will happen in the next 3 years, she considers it a real possibility within our lifetimes. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
My base case would be not in this administration, so not in the next 3+ years. When we look at a long enough time horizon, when we start talking about kind of the prior questions of what does this look like 5, 10, 15 years from now, I think that's more likely to enter this scenario where you have some sort of official devaluation to potentially pay off some of the debt. That's kind of a mechanism they have to spend without issuing bonds, is revaluing gold up. So I think in our lifetimes that could happen. My base case, not out of the realm of possibility, but my base case wouldn't be the next 3.5 years. In Trump's first term, he was more anti-Bitcoin. And there's been I think it's been proven that in this, especially this past election, that being in any way anti-crypto and it's especially anti-Bitcoin is not really a winning strategy for elections. There's no marginal vote that a politician gets by adopting that position, and there are plenty of single issue voters and funders for being conducive toward the industry, and so I think that's a new trend. And then two, they find that they want to own it themselves. I've also been critical of the meme coin trend. I think that's a grift that we see not just in politics but just globally. So I think that there's some that have coined it the golden age of fraud or the golden age of grift, and I think we're kind of in this blend of politics and capitalism. And I don't know, it's an interesting environment. I generally am skeptical on a lot of these things. Like I've been skeptical on the size of the Bitcoin strategic reserve, skeptical on kind of the right types of policies coming, skeptical on kind of the citizens' right to financial privacy. And so I tend to take good news with somewhat of a grain of salt and instead look toward tangible things that are happening. And there have been some. It's certainly a better environment in the space. I think one of the other things that goes under the radar is Operation Choke Point 2.0. And so during the prior administration, there were clampdowns. If you were a Bitcoin or crypto company that merely had a bank account, there were all these attempts to kind of push you out of the banking system. There are many companies that had to go offshore that were just kind of facilitating payments and things like that. And the regulation environment has much improved for many of those. I wouldn't say it's over, and they're still raising concerns. There are those that are still raising concerns that this is not kind of fully addressed yet, but that has certainly moved in the right direction under this administration compared to the prior one. River puts out great reports, that one included. I had a chance to check that out. So it's a great report to discuss. The broader trend of could this be a bubble? The short answer is anything can be a bubble if it's overpriced or over levered. So I certainly think that this can get overdone for periods of time. And in some areas already has. So for example, when MicroStrategy was over 3 times net asset value, that was pretty euphoric. There were other ones with like MetaPlanet was over 6 times. And I think those teams are great. I think that those teams are doing very well, but investors can sometimes overbid the asset. And then it just depends on how well that's managed. I think that the market for companies that just have another business that then add Bitcoin to the balance sheet over the long run is longer than pure plays. But I do think that pure plays, if you're the biggest, most stable one in your currency, that's generally a pretty good place to be. So that's, for example, MicroStrategy in the US or MetaPlanet in Japan. I think it makes sense for some of these pure plays to pursue that strategy because they're the leaders, they're first movers. in those environments, and they're being rewarded for it over the longer term. So then you watch things like how high are their MNAVs, how high is their leverage. So far, I would say there's nothing that's super concerning in terms of coming back and harming the Bitcoin network in any meaningful way. Every bear market in Bitcoin history has had some overexposed prior buyers that have to sell. Like last time we had Luna buying, Terra Luna was buying Bitcoin when things were good, and then when its whole thing was imploding, they had to forcibly sell their Bitcoin into the market. That was one example. You could certainly have that kind of thing happen again with some of these Bitcoin treasury companies, or more broadly, these other altcoin treasury companies. And that's where I actually would be concerned around more of the bubbles is in the altcoin space. But even in the Bitcoin space, it can get overdone. But Bitcoin is a proof of work network. Right now, the leverage in the treasury space is pretty manageable. And the MNAVs have already come down pretty significantly from their bubble heights. So, while I do think that if we have this conversation years from now, I think we'll be looking back at the bear market and say, look, this company XYZ had to liquidate its coins right in the bear market, and maybe multiple of them. So there will have been some capitulation. But I think the overall trend is fine, is how I view it.
The political landscape around Bitcoin is changing. As Alden notes, the era of being anti-Bitcoin as a winning political strategy is over. Politicians are now realizing there are no marginal votes to be gained by opposing the industry. And in fact, there are many single-issue voters and influential funders who support it.
Near term, potentially longer term, it's one of the bigger hurdles that might have to be overcome. I tried as best I can to defer to the technical experts in this area. So I directly talk to those who either are involved in quantum computing, those who have proposed updates to Bitcoin to further make it resilient against quantum computing, and things like that. Those that are trying to build companies that are addressing potentially some of the quantum vulnerabilities. The short answer is that Bitcoin is upgradable. It already gradually updates over time. Most of those are not consensus changes. Some of them are consensus changes, more rarely. And so with Bitcoin, the main vulnerability is not the core encryption itself. It's not as though the first time you have a quantum computer can just unravel the whole Bitcoin blockchain. Instead, certain signature types become increasingly vulnerable should there be a sufficiently powerful quantum computer. And so one of the first steps that people can do is, if they're in those generally very old address types, they can move them and take other practices to defend their own coins against potential security issues related to quantum computing, should it materialize faster than people think. And then two, the Bitcoin network itself does have some potential soft fork updates that can add new signature types that are more quantum resilient than even the better ones are today. Generally speaking, the downside is that they come with more block space. So in Bitcoin, there's kind of a limited amount of block space per block, because it takes up bandwidth, it takes up storage. And so you generally don't want to use a bigger signature type than you have to. But should that day come, or should developers and investors get worried that it's coming soon, there are upgrade paths to protect it. So my general view is that it's not a non-issue. I have put considerable time into talking to the people that directly work on it in their programming or in their other capacities. And I'm satisfied that the Bitcoin network has methods to circumvent it. I also don't think it'll hit in an investable time horizon of, call it, 5 years. But I do think that I am glad that there are people that are already sketching out which signature types make sense, what types of upgrade paths would be doable, and things like that. So I don't view it as a likely existential threat, but I do think it's one of the ongoing serious risks that people do have to consider. So if it hard forks, now some of these changes can be done with soft forks, potentially. Other ones might require hard forks. If you have a hard fork happen, the chain would split into two. Ostensibly, one of them would be more quantum resilient than the other. And any current holder of Bitcoin would now have that number, but they'd have both coins. Now, historically, when Bitcoin has done hard forks, I mean, anyone can do a hard fork. I could do a hard fork this evening, just no one would buy it. So anyone can do hard forks, it's open source. But in Bitcoin's history, there have been a handful of serious hard forks, meaning that there's an amount of scale behind it. There are a number of large buyers, large miners, things like that support it. Historically, the hard forked coin, the one that's no longer backward compatible with the existing node network, that has historically not done well. That generally will fall in price and that value will get reabsorbed into the main chain. Now, should there be a scenario where quantum risks materialize and there's a quantum resilient hard fork, that's a possible scenario where the newer fork is the winner and becomes the new main Bitcoin. The way that users can protect themselves is if you just hold both coins, you get the benefit of whichever one wins. It reabsorbs the value of the other one. So, for example, when Bitcoin and Bitcoin Cash split, if you did nothing, you still hold all the Bitcoin you had pre-split, and you'll have an equal number of Bitcoin Cash, which is worth de minimis now compared to the Bitcoin, but you haven't lost any of the Bitcoin that you had. On the other hand, there were some, say, experts at the time that had very high conviction that Bitcoin Cash was not going to win, and so they could actually sell their newly generated Bitcoin Cash and even increase their stack of Bitcoin. So someone's high conviction, they could be right or wrong, but they can sell the fork that they don't think is going to win, double down on the one that they think is going to win, so it's an opportunity. But if someone's not sure, which is probably the vast majority of people, they just can hold both just by doing nothing, and they get the benefit of whichever chain wins. I would say yes, because it's not as though there's one entity that can just do a fork. The fork is decided by the market. And so, for example, when Bitcoin and Bitcoin Cash split, the market decides what is the true Bitcoin. And so by simply holding both, it is true that now there's 42 million coins because you have 21 million Bitcoin, 21 million of this fork, but that fork devalues. So Bitcoin Cash is worth like 1%, for example, roundabouts of the Bitcoin network. And so it didn't really take any share other than the first several months of that contest. So there's this kind of brief period of time where there's this narrative clash, but then when the dust settles, actually I would say it was actually a strong case for Bitcoin being hard money, because you had major exchanges, major miners all trying to forcibly change the Bitcoin network, and all they did was basically create their own copy of it that then slowly disintegrated back into the main Bitcoin chain, at least all of its functional value. And so Bitcoin as a software network can update over time, but kind of like how USB became USB 2 and became USB 3, and kind of like how Ethernet has, the Cat 6, Cat 7, Cat 8 cables that underpin network connectivity, they all update and get faster over time, but they're still backward compatible. They're still kind of their core system. That's generally how Bitcoin updates. And so it's this period of time where it does change, but it's not as though there's one central issuer of that change. It's a distributed network. And so only very high consensus changes are able to make it into the network and become the new dominant network.
For the average user, her advice is simple. In the event of a hard fork, do nothing. By simply holding their Bitcoin, they would then own both versions of the coin and would benefit from whichever one the market ultimately decides is the winner.